Imagine a region where AI models are trained through the state and private sector collaborating. Seed rounds are written by sovereign wealth funds, and the next unicorn might IPO in Abu Dhabi before it does in New York. My guest is helping to build that playbook, from co-founding an AI startup to steering a $500 million fund that's rewriting the rules of venture in MENA. Stay tuned for Dr. Bilal Baloch, who's about to tell us why the biggest liquidity boom for the next decade might start in the desert. Bilal, you've gone from advising investors on macro policy and teaching at the world's leading business school to co-founding an AI startup, and now writing 2 to 10 million checks across MENA and Asia. In one sentence, what problem are you waking up to solve in 2025?
Thanks for starting with a small, easy question, Ricci. First of all, thank you for having me. This is a real pleasure. I've been seeing some of the podcasts you've been doing and really engaging and insightful conversations. Look, I think innovation cycles don't go by calendar cycles. And what we've seen over the last few years is further and further automation is spreading like wildfire across all industries. Of course, the most prominent break in that was the rise of OpenAI and ChatGPT. But really, the emergence of AI, the emergence of natural language processing as a precursor to what we now call AI, has been in the zeitgeist and in the minds of engineers and product developers for a very long time. So today, just as last year, we're thinking very actively about automation and AI throughout our companies. Now, that doesn't mean that that's the only way to win today in technology, but certainly a strong founder, a strong CEO needs to have a strategy on how they're going to be either leveraging AI or utilizing AI. And enabling AI, either internally even if it's not in their products, on how they can become more efficient and more autonomous as an organization.
And what have you seen so far then from someone that co-founded your own AI startup, very knowledgeable in this space and now investing? Have you identified any particular gaps, or how forward-thinking are the founders in the MENA region about embedding some sort of AI into their product workflow services?
Look, ideas are not the challenge, right? We have some of the strongest founders across the region, especially when we look at what we consider the region from a Shahrukh standpoint is really sort of Morocco to Bangladesh and everything in between. So ideas are not the challenge. The challenge is really about execution and talent. There is some fantastic talent in pockets when it comes to AI, but oftentimes historically what we've seen is that talent gets attracted to going to more developed markets. We'd like to see more of that talent stay here. For them to stay here, they need to be able to see that companies here are working on cutting-edge products. We have the likes of Mozen in Saudi Arabia, Intelmatics in Saudi Arabia, but also Protinia in Egypt. So we're seeing companies that are, building foundational models, but also companies that are leveraging AI to improve their businesses, emerging in very serious ways now in the region. So I think the talent is likely to notice that and see it, and perhaps we'll start to attract talent from different markets. I speak to product developers often on a weekly basis from different markets, and we're hearing a lot more of those that perhaps have a link to the region. Perhaps they've established themselves in a developed market context, and they want to try their hand at building something new and innovative. I think what helps this ecosystem is that there is a big push and support from the government, from regulators, and generally even from investors and everyone involved in our ecosystem to say, let's support this, right? Still, there's some friction when it comes to AI in markets in the US and in Europe along the continuum of what I just mentioned, whether it's regulatory, whether it's from customers. And so we can get a real head start there in our market on that count.
Yeah, I agree. And I think definitely that is the sweet spot at the moment from an AI talent perspective. Folks from whether it's US or Europe that has that link to the region, now they want to come back and have an impact. But I'm sure there's probably going to be some other pivotal or turning points as well to over the next few years to be able to further attract that talent as well, because you're still going to hit a talent density issue, especially when it comes to AI. We move into the sort of the founder and investor art from a policy muscle side. What did advising investors teach you that most VCs miss?
VCs are typically, I'm an unorthodox VC. I'm an accidental VC, as I like to say. I come from a political economy background, a foreign policy background. I then had a startup that I ran for 6 years, which is my bridge into VC. So typically what gets missed from your orthodox background of business school and finance, which are incredible tools to have to be an investor, is the politics of it, right? And I don't just mean how organizations can be political organizations, how we're functioning in markets where political risk is often quite salient, but the lessons learned from the world of policy, the world of regulation, the world of political risk, they allow you to look at the variables of what creates innovation and what creates sustainable economic models from a very different perspective, right? So how does that impact us? Well, thinking about which markets should some of our companies go into, right? Sometimes it's not completely clear that they should go from one country in the region to another. Perhaps they need to jumpstart and go to Asia or to Europe, right? That requires a very localized sense of market intelligence and how products could get rolled out in distinct markets. Another way in which a background in policy and regulation helps is to see the forest from the trees, right? And understand that, the big picture of how to roll out a product in, say, financial technology and being able to procure licenses and what that timeline could look like and how that marries up to go-to-market strategies or even fundraising strategies. Oftentimes founders can miss the steps on that. So in many ways, the role of a VC here is not just to find good companies and invest. It's actually to be part lobbyist, part coach, and have a fuller understanding of these dynamics. So I don't know if I could do what I do in many other markets, but certainly in a market like ours, which is quite rich and deep and quite varied, it becomes a tool that can be leveraged.
And you touched on it there. Do you think we'll actually see more and more companies here in the region expand into Europe, shall we say? Because there's very little at the moment, right?
Look, it's going to start happening more and more. I think part of that is because we're getting far better quality companies coming out of the region. The test case for any startup is always the key to their ability to roll out to different markets, right? Why do Chinese companies do so well that are B2C? Is because right from the outset, Chinese founders are thinking in multiples of hundreds of millions, right? Similarly, if you are a founder in Pakistan or Egypt or Saudi Arabia, the way in which you're thinking about customer challenges, customer onboarding, scale is very distinct and different, and it sets a very high bar for what constitutes product rollout. And so conceivably, if you can jump through those hoops, then arguably going into adjacent markets, whether it's in Europe or in Asia, should become quite compelling and attractive. And I've seen this firsthand when we take some of our companies to meet with investors in London and other parts of Europe and the US. And these investors always pepper our founders with, well, we've seen some equivalent of you in Latin America, we've seen some equivalent of you in Asia, etc., which is fair. And I'm always impressed with the responses given by our founders on how they've thought through some of those puzzles, which some of their peers or those that look like them in other regions haven't. So I think we'll start to see it more now. And then from a pull factor, I think, Europe's ecosystem has for a very long time been on the decline when it comes to innovation. And so I think Europe could really benefit from looking at the Middle East as a part of the world that they want to be able to attract companies from.
And have you spoken to some of those investors already? I know you obviously did the roadshow, but like in US and Europe, and maybe what are they thinking and what are they saying right now? Or do they have any reservations?
Look, I think from a GP standpoint, we tend to be committed to the mandates that we're given by our LPs. So as things stand, the mandates that are given to the median investor in the UK and Europe certainly the US, the Middle East doesn't feature as strongly. Now, I think that will change. And so in the conversations I have when investors are talking about their next fund, they're now beginning to talk about having some allocation for the Middle East. What will help that is LPs for those funds coming from this part of the world, right? And so I think it's an entire whole of ecosystem approach where allocators from here that are quite sophisticated and very much globally minded need to be telling funds that they're supporting that we want some of the investment that we're putting inside of your Fund 3 or Fund 4 to come back into the region. And then, of course, the marker set by the likes of General Catalyst, who put their first check into the region, into lean technologies, QED, who recently invested into one of our companies, Nimcard, Augmentum, who are in PEMO. These kinds of first mover checks, they make a splash, and people take note, and it allows us to go there and also educate the investors further.
It's definitely positive sentiment. Around obviously being a founder, do you ever seem to take your founder hat off now? And maybe it'd be good for the audience to hear about maybe some mistakes you might have made as a founder as well.
Yeah, loads. I always used to find this to be a cliche when founders or leaders would say, oh, my mistakes, I learned more from my mistakes. I was like, yeah, okay. But you see that firsthand. And you see it firsthand, actually. To be very frank, I perhaps didn't appreciate it as much when I was a founder, and I do now, right? I think one of the main ones, and I say this to all our companies, is that as a CEO, do not let go of the reins of your go-to-market strategy and your main sales functions too early. There's a trend, and I understand it, that sometimes when you're raising a lot of capital and the role of the CEO shifts from just execution to actually also being a fundraiser, essentially full-time, to being a representative of the firm and sometimes even of your industry, that the brass tacks of business development, sales funnels, customer success, it's tempting to bring in a very sparkly person from your industry to come and take over, right?
Logos.
But it is... Right.
A lot of them want to hire for logos.
A lot of them want to hire for logos. A lot of them want to hire for... Well, look, it's also a job that requires, a hard graft.
Yeah.
But it's the one area of your business that, in the absence of a CEO, you lose the heft of being able to really take forward, especially a B2B sale. You lose the relationship with your customer. And your sense of attachment to exactly how your customer journey is evolving becomes too distant for you. And I've seen this time and again, and especially in B2B companies, it invariably leads to a slower growth curve. So that's one of the big mistakes that I think founders still make today. I've made it. And to quickly pivot from that is very important.
And obviously, founder, investor, you've been in the region for a little bit of time now. If you were to build a company today, what would you build? In the region?
That's a tough question. I'm more and more interested in B2C companies.
Interesting.
Right? I come from a B2B background. I built a B2B company. I invest in B2B companies. But I think what's really exciting about the region, Ricci, is just the variance of populations, right? We're seeing since Saudi has opened up, the energy that you have in Saudi and among its citizenry is incredible. And these are sophisticated consumers, right? Sometimes as sort of political economists or commentators from the outside in, we think a country's life sort of starts and ends when it opens up or liberalizes. No. Right? You talk to Saudis and they have a very sophisticated understanding and position on the brands they like, the products they like, what they don't like, more importantly. Of course, similarly in the UAE, but we have a pretty global and cosmopolitan edge here. And I think something similar is happening, slowly and less so, but something similar is happening in places like Pakistan, India, Bangladesh. Just see the proxy of the amount of travel that's happening in that part of the world. So I think the time is right for newer products that can be in the B2C space, whether it's in fashion and cosmetics, whether it's in travel. We have a fabulous company called Roamless, which is a global eSIM provider. The markets that they can penetrate and what they can afford people who are now increasingly traveling, and what you're able to do on your mobile phone device, where most of our daily activity occurs, everything from your banking to your call with your family members. These are the kinds of products, the enablement products for large populations that are increasingly internet savvy and mobile savvy. Those are the kinds of products that if I was a founder today, I'd be focused on.
And what you touched on there, so what is your honest opinion on in terms of the Saudi market from what you've seen? Because that's a lot of the executives I always get calling me from various different countries as what's happening there.
Yeah.
I'm hearing this, I'm hearing that. Like, what's your general gut instinct of maybe some of the nuances, some of the challenges, and where that market is heading?
Yeah. So look, it's a very large market, and there's many different directions in which different parts of it are heading. I'll speak to the piece that we know best, which is on the technology and startup ecosystem. And there you actually have two Saudis, right? You have the Saudi where you get very sparkly, exciting, infrastructure-laden startups, especially in tech, which are supremely sophisticated, the likes of Lean, Lendo, Mozen, and others, right? And they are, in many respects, the flag bearers for that one Saudi, right, which is globally oriented and looking to go toe-to-toe with other markets. There's another Saudi where actually startups, oftentimes tech startups, but also tech-enabled and tech-adjacent startups, have been emerging and on the rise for many, many years. And they've been servicing their local market. They have excellent fundamentals, and they wouldn't be considered sort of the globally oriented companies. But these are ones that are great candidates for public markets. These are companies that are great candidates for actually why we do all of this, which is social impact, economic impact. That's an area where I think we at Sharook, but also investors generally, should be focusing a lot more. Because these are the ones that, especially international investors coming in, don't always get to capture. So my advice to international VCs would be, come in and spend time in the country and look at the various different types of ecosystem. It's not just a sort of homogenous one.
And you're seeing more and more of that from the events as well, attracting a lot of global investors. Just taking a better inside look into Sharook then. First 90 days after a seed check, like, what does your value creation team actually do?
Yeah. So it's a bit unorthodox because typically venture capital funds don't have value creation functions, right? We're not majority investors. In some respects, we can say, look, here's a check and, we'll see you when you need something, right? I know firsthand that happens a lot in the US. We see it very differently. We see it as our responsibility as investors, but also as a demand of the ecosystem, the stage it's at, and also how we can actually affect change, that we need to come in right from the outset. So we build 90-day plans, 100-day plans to help our companies right from the minute we cut a check. We'll sit down with them. We'll have a concerted process and set of sessions where we go through the 3 pillars of what value creation is at Sharook, which boils down to talent and culture, fundraising and capital needs, and strategy and business development. And on all 3 of these pillars, we look to help our companies map out what their needs are, because those are also capital intensive pillars, but also time intensive. And so we want to make sure that our founders aren't spending all their time looking to hire the best people that they can meet, people like yourself and others, that they're not spending all their time figuring out their go-to-market strategy, but that we map out with them what a playbook looks like, and so on and so forth.
And how do you decide then when to double down versus let it ride?
If I knew that, I'd be sitting at home chilling. Look, it's very difficult. Part of it is an unhelpful answer to you, which is, you develop pattern recognition when you have so many companies. We have over 80 companies in our portfolio. We do this day in, day out. those are just the companies we've invested in. There's also the data points of the companies that we don't invest in, right? So I think we see over 90% of companies in our ecosystem. That requires a lot of work. So I think the foundation of what creates our heuristic of doubling down or not is just quite simply the pattern recognition we've developed over many, many years. Then you can expand that pattern recognition outside of the UAE to the similar approach we have in Egypt, in Saudi Arabia, in Korea, markets that we're very active in. And then also it's our value creation function, right? I think one of the things that investors miss when they just cut checks and then keep a distance is they think that their work is done in assessing that company and founder. And unfortunately, we're in a business of risk capital. And sometimes that risk capital can go in the right hands. Sometimes it goes in the wrong hands. And so we have to keep constantly engaging with our founders, the businesses, to understand what are the pieces of evidence that we're seeing on how they build culture, how they hire, the decisions they make around go-to-market. Of course, the brass tacks of their numbers, right? That much is easy. You see it on a P&L. But that's not sufficient. You have to actually spend time with the founders, with the teams, to really understand the direction in which the company is going. And that can only come from having a concerted focus on being beside them.
And you spoke about 78% of tier one talent chooses country with clear upskilling paths. Like, who do you think's fixing the talent flywheel?
Look, right now, I think we're benefiting from the fact that top talent, ready-made, packaged with a bow on top, is coming to the region, right? I think if you look at all the metrics in terms of talent flight, certainly capital flight from around the world, one of the main destinations is the UAE. So that's so far. I do think, however, that, again, to anticipate what's going to come in the future, if we want to make sure that talent not just comes here but stays here, but also that we cultivate talent from the ground up, from the region and locally, that they need to have some of those opportunities for upskilling here. We've seen more and more universities are establishing here. NYU Abu Dhabi has now started its business school here, Stern, which is focused out of New York and will be here. Georgetown here in Dubai is starting a business school program. These kinds of efforts to help not just founders, but also junior professionals to find opportunities to learn here, to learn while they're working, and also have more access, I think is going to be very important.
If we just look at MENA as a whole and some of the macroeconomics and so forth, spoke about the liquidity gap. Only 2% of exits are IPOs. What single policy would unlock or fix this?
Look, it's going to take a multi-pronged approach. I think the one that comes to mind is growth capital, or let's call it pre-IPO capital for tech companies. Right now, the fundamental way in which tech companies are understood is incongruous with how tech companies actually behave and scale. Picking one example, there is a 2-year profitability requirement on companies before they can go and list. These kinds of, seemingly small policy changes are what hold back a lot of founders in thinking about a pathway to an exit. Now, I think the positive side of the story is we're only now beginning to get to a groundswell when we have a sizable number of tech companies here in Dubai, in Saudi, and around the region that are heading towards the IPO path. So I imagine that number to change. I mean, the largest tech IPO in the world last year was here in Tel Aviv. So I think things are going to change, but regulators and policymakers cannot just sit on the supply side growing. They're going to have to kickstart and jumpstart their flexibility and their openness. Thankfully, if other institutions in the UAE are to go by the central bank or even institutions like VARA, there is very quick change that can happen that can become globally competitive.
Yeah.
But there needs to be a focus.
And do you think sovereign funds should keep seeding VCs or take a step back?
Seeding VCs? Yeah, look, I think they should. I think sovereign wealth funds now here are considered the most sophisticated amongst their group and peers, right? Whereas 25, 30 years ago, sovereign wealth funds were seen as just a piggy bank for state coffers. Here today, around the world, but especially in this region, they are seen as sophisticated investment platforms and firms that are able to move markets and really build institutions for the short and the long term. And that's exciting. What requires successful venture capital investing is to have very local playbooks and to have very local teams and to be able to graft and work locally with founders so that businesses can get off the ground. That's simply not what a sovereign wealth fund should be spending its time doing, right? They can do some of that, but really the way in which they would be able to do it is if they have a strategy whereby those funds that are closest to the action, such as ourselves and all the other wonderful VC firms across the region, that they can fund them and support them in being able to do it. Plus, look, it's great for the institutional development of your entire financial ecosystem, right? It helps to support funds, and tomorrow these funds will double and triple in size, and that is a net positive for the economy.
Yeah. If we just move over to the founder side now. So storytelling versus data. Why do the best pitches win narrative first in MENA?
Look, for me, whether it's MENA or not, narrative first pitches always win out. And that's not to say that there's a zero-sum game here. Look, your numbers, your performance speaks for itself. But what a strong story tells me is a lot more about the management team, the commitment of that management team, the vision of that management team, and their ability to execute. Why is that important? Because as an early stage investor, that's probably a third, if not half, of what I'm going on, right? You're coming to me with an idea that typically hasn't been done before. You're coming to me with an idea that by virtue of the fact that it hasn't been done before is going to be up against it. And you're coming to me with an idea that has future value. So in order to assess it today, I need to be able to understand how you view that vision and how you're going to be able to execute on it. And poor storytelling, for me, is among many things, an example of poor conviction from you. So how can I have conviction in something that has a pretty high bar for success if you don't have that same conviction? Your numbers can only tell me so much on that count.
We have the same thing in our industry because I am the front facing of your company. I'm selling your company to executives. I need to understand it, and in simplified terms as well. And we have it so many times with founders where they overcomplicate it, and I'm like, I can't sell this to people. So I think, 100% it's super, super important. And if we look at the Series A bar, like, has product quality slipped, like, as capital surged?
No, I don't think so. Not so far. Look, we're talking about a very small set of data points still. In my experience so far with our founders that have gotten to Series A and beyond, they're actually quite cognizant of the newness of the space they're entering. And so you see a very subtle but important pivot where they actually start to become even more focused on the product. Of course, that's helped by bringing in top talent. But they realize that the stakes are high, right? So I think so far, the more capital that's come into the system, it's actually shifted to an even deeper focus on the product. Where I think that will go in the future is hopefully going to be bigger, better product developers in the market. Of course, AI will be a big player in that piece, and more acquisitions, right, which will invariably strengthen products as well. We haven't seen that kind of deep trend of consolidation or acquisitions in the market yet, which I think will start to happen as we get to more and more companies that are sort of Series A and B, and certainly don't want to fall into the trap of sort of a plateauing product as capital becomes abundant.
And have there been, since you've been in the region, and have there been any particular gaps in leadership that's like a common pattern that you've seen? I've known firsthand, I could be wrong in saying this, but when it comes to what I do in talent and hiring, it's not that the founders don't want to build great companies. Of course they do. But a lot of them don't value the whole process that it takes to find and identify A players. It's very much a CV sifting ecosystem for what I've seen, and that's the whole value add from our perspective of being here to level that up. But maybe from your side, has there been any particular gaps that you've seen? Might be controversial.
No, not controversial at all. I think the gap comes in probably one of the areas that's hardest to do for B2B companies, and that is marketing. Right? Founders often want to be focused on what they're building it, shipping it, scaling it. And that is absolutely okay. But especially in B2B, and especially in a rich, urban, cosmopolitan market, where increasingly now you're beginning to see alternatives. And even more, if you layer onto that cross-border selling, you need to have a sophisticated approach to marketing early on. And founders come to it too late. Look, that doesn't mean you need to hire someone for marketing straight off the bat. There are plenty of agencies out there. There are plenty of sort of junior talent, really solid junior talent that you can get in. But it's something that founders, not just here in the region, but quite frankly, B2B founders, even in developed markets, and not just growth markets, come to too late.
And have there been some key hires then that you would probably recommend to founders that are the real needle movers, that is like a must?
I think junior business development representatives. Like I mentioned, I don't think CEOs should withdraw their hand from the bread and butter sales functions of a startup too early, despite the temptations. In order to do that, you need to have a really strong bench of junior to mid-layer staff that can really help generate and swell up your sales functions and also your customer success functions. That is, I would say, a really critical part of a business. Now, unfortunately, those are also people that are really hard to find because they're in that sweet spot of, college grads, maybe 2-3 years of experience. So they're not the worthwhile of a recruiter to find them, and they're typically somewhere else. So you're looking to poach. So it becomes very difficult. So what you need to do is actually invest and coach, right? Is find people early and invest time in them and get them up to speed. And that's what makes that hire both critical and also hard to find.
That mid-level's always been tricky across the spectrum because obviously they're still growing, and if they're going to move, they're looking for that career jump as well. So that finding that balance is tough.
It's very difficult, but without it, you can't build an institution. You end up having a lopsided organization.
Yeah.
And so actually you end up compounding the very challenge you have as a leader, as a CEO, which is, who do I delegate to? Right, I'm having to do everything, and so I end up not doing all the things properly that I want to. I actually think our market, if seen as in its entirety, can be a real antidote to that. So we've seen some of our companies hire that mid-level, sort of junior level, maybe not in their core markets, but in adjacent markets, whether it's Egypt or Jordan or Pakistan or India, where you get really, really strong candidates that have either, gone to some of the best schools and institutions domestically, or they've studied abroad and come back. They're very hungry. They typically tend to have the privilege of not needing a high salary, and they're really attracted to the idea of working in a growth market and having shares in a startup. That kind of early career enthusiasm and hunger I think can be tapped into if you sort of venture out of your immediate space.
And has there been any common things as well that you've seen when founders, the companies they aren't growing in revenue, scalability? Is there some things that you can unlock quite quickly there?
Quickly, no. I think what we do quickly is we start to diagnose and we start to do our diligence. But oftentimes you'll find that the levers are known to us ex ante, right? It's typically going to be something that is there's some kind of a mismatch or a misalignment between product and market. There could be a misalignment between the team and the talent and the way in which the product is being sold. Oftentimes, and this is sort of more egregious, is if the product, quite frankly, is a nice to have but not a must have. Again, I'm talking about the world of B2B. And so we like to get into that quickly and start to investigate what's happened. The quick fixes often actually start there by just being a sounding board for the founder and being able to dump onto them what our experiences are and guiding them through the challenges. In my experience, if I was to pick one, it almost always tends to be a misidentification of your customer and what the customer's needs are, not what the customer would like to have, once in a while. Because we're not in the business of just selling, we're in the business of selling repeatedly and in a scalable way. And that's where sometimes you can misidentify confirming evidence for your product.
We found exactly that. We invested in a new CRM. That's always the challenge in recruitment. What's the right CRM? We moved to all of the bells and whistles, all this AI, but they just keep building things that they think they should be building and we're like, where's it gone? Like all of what was seamless, and it's like they're mad that they're not talking to the customer, especially in our industry. So some quick fire questions then before we wrap up. Maybe they won't be as quick, but tech and AI. So where will the real value occur? Infra, models, or vertical apps?
Infra.
Sovereign data LLMs, UAE versus open source. Where's the moat?
Look, I think in a hybrid of the two. The fact that we have sovereigns here that are themselves looking to be innovators in AI, where in the world is that happening? Right? So this is going to present a pretty significant opportunity for talent, for startups that might be ahead of the curve on stuff that the sovereigns want to build, the kind of data gathering capacity that only states have. We saw that in a somewhat related example with the collaboration between tech companies and the Indian state when it came to the biometric system Aadhaar, right? So when that collaboration happens, you can tap into pretty significant size of innovation.
Which layer of the AI stack is widely underinvested in the region?
I think they're all underinvested in right now around the world. So that's not just a MENA challenge. I think we need to come to grips with the quality of AI companies right now, sort of separate out those that are going to be winners from not, and start to double down. Mm-hmm. Right now, the pace of innovation is racing ahead.
150 to 250 million seed fund, optimal, agree or disagree?
Ooh, say that again?
150 to 250 million seed fund, is it optimal, agree or disagree?
I think in our market, yes.
Biggest career failure and one lesson? Becoming an investor?
No, I think biggest career failure. Look, I'd say I don't see things as sort of successes and failures. I like to look at them more as sort of, mistakes to learn from. So I think biggest career mistake is perhaps not getting into startups sooner. I think I got in too late, and I've been very privileged to be able to build one, scale one, and exit part of it. But it would have been fun to do it in my 20s.
Do you think you'll go back in the future?
Maybe.
100 million fund or 100 million single check? What's riskier today?
100 million check.
One question every LP should ask a MENA VC.
Ooh. What's your value creation plan for your founders?
Nice. Last but not least, our crystal ball. Headline that you want to read in the FT in 2030 that proves that MENA Tech won.
Abu Dhabi fintech leader acquires Silicon Valley fintech competitor.
Amazing. Thank you for joining Breaking Down Barriers. It's been a pleasure.
Thanks for having me, Ricky.